Okay, guys, good afternoon to all of you. Welcome back. It's 1:35 p.m. Singapore time, and we're going to start the second session. I hope that you take less carbs as now so they can be more, uh, clear and sharp for the afternoon session. Now, usually for second half session, usually we get a bit lethargic as time goes by. So please keep yourself awake by giving one some sweets or something to make you walk around while listening to me. I'm fine with that. Yeah, that's why I allow you to off your webcam. For those who turn on webcam, they'll be excellent like Raj, like Susan, like Yo. Turn on webcam, that's good to keep me, looking at you guys. Okay, let's start the session right now. Okay, let's go. Okay, so this morning we have covered what is the OP rule. All right, I told you OP rule is very, very important for us. Now, that's what was the feedback was given to me is that but the different broker got different OP. Then how do we know which broker or which OP to use? So I said that again. All right, by default itself, right, due to now the current time, the non-daylight saving hour, the 5 a.m. 5 a.m. now is actually the default opening time for Forex, then followed by the indices open at 6 a.m. Okay, so this one just take note of that, yeah. So if your broker doesn't open at 5 a.m. for Forex or 6 a.m. for indices, then maybe you need to be careful because that will become confusion. Second of all, it's all right. By right, there shouldn't be a weekend data. Now, I know some brokers, they actually use their server happen to be in the Middle East side itself, right? Or the Europe side. They may have a Saturday data. And that is also an issue because extra one data will shift the whole thing of the KSI and the KCX. So that is also another issue itself, yeah? Okay, so this one, all take note of that. So that's the reason why we need to use one broker. Okay, so the OP of the day is actually available on the desktop version and on the handphone version. So you can use that as a guide. Okay, yeah? So OP rule is very important because as long as the market stays above OP, we buy. Below OP, we will sell. It's very, very important. Now, MLP is important because that will give you where the minimum the market will be heading. I mean, example, mid-level point, meaning right, if the market stays above it, generally the market is still the buy side. But if the market goes below the MLP, then the buyer becomes seller already. So MLP is very important because if you look at me, every time when I type my market outlook, right, I always start with opening price, then follow by MLP. So that will give me the general sentiment of the market. So if the market is above MLP and above OP, I would definitely be a buyer over a seller. That is something that you must take note, yeah? All right, the red and yellow candlestick. I said many times before, this is not the Hikendashi Hikendashi candlestick. All right, it's not. This one includes three different condiments that I shared earlier already, so I will not go through that again. So one thing to take note is that sometimes if you notice this, the candle can be yellow color, but actually the market is coming down. So that's why referring to the OP is more important than not. Okay. Now, the daily KTR stands for the Cal-True range. This basically is different from the Cal-True range, the parameter is different from each of them. That means NASDAQ got its own KTR, Dow Jones own KTR, Forex own KTR. So basically, right, why the system is so expensive in a way is because every market I have took time and effort, at least 3 months to 6 months to back test for you and forward test for you so that the accuracy is impeccable. Yeah, so that's the reason why a lot of people try to copy my KTR, but then when they go back to the real world, it's all right. They find hey, how come it's different? Because first of all, the OP is different, and every 3 months to 6 months, I will upgrade the KTR to make it tighter and tighter to the market condition. Yes, you cannot tell me that what happened 2 years ago will be the same. Come on, let's just face facts. 1999 with internet, and that's like 1G level. Then we now it's 4G to 5G level. So you cannot compare Apple with Orange, even though they are fruits. All right, so this one you must understand this. So that's the reason why I'm not afraid people copy me or they break my source code and then they copy and put it outside. I can tell you this, even now I take this source code, I give to anybody to copy and then they put it outside to sell for $1. They may not use it because it's $1. So I'm not afraid of that, yeah? Now, there's another question that people like to ask me, Kel. Now, what if everybody start to use your system? Will that cause the market to defray from the usual thingy? Now, this is a very good question that I used to have it, but you see, when I start to promote KTR since 2011, KCB 2011, until now itself, now it's already 2025, all right, 14 years has passed. It's still using, it's still usable. So seriously, maybe one day we are so big that what we call for, wow, really move the market, then maybe that could happen. But until then itself, I don't think that will be so in near term. So don't you think so far away? I'm in the market for so many years. My indicators have been given to more than 10,000 people along the years. Still, the system is still working fine. So don't worry about that. Okay, don't worry about that. All right. So the power of pivots, I told you, right? The resistance and support is very powerful. So never fight the pivots. Okay, never fight the pivots. Okay, so to explain to you why the word never fight the pivots, I think for this class itself, some of you are actually my student, right? My current student. Can you verify with this statement? Y'all give your answer to it. I, the creator of the pivots, informed everybody before pivots cannot be, you cannot go against pivot. Is this statement correct or wrong? Please give me more than one word answer for this so that you can give your information to all the new people here why they cannot go against the pivot in your own words, right? If you think that pivot can be trifled with, just key there. If you think that pivot is so powerful, cannot fight against it, also write it there. So you write in your own words to tell the second generation here that, hey, don't mess with pivots, all right? Can you key something now? I'd like to see your sharing in the comment box, yeah? Because I am the creator of the pivot. Yes, I am, but I'm not the direct creator, right? So that means that, right, actually throughout this whole process itself, I think somehow, somewhere, my antenna went to the sky and I collected this data and I know that this data don't belongs to me. So that's why I say don't fight the pivots, okay? But I think for them to write, yeah? All right, then what is the moving average then? Now, okay, maybe go sideways, look at pivots, breakout, all okay, but you are new. Raj have a statement on there like, yes, correct, have tested to go against it and got burned in the past. That is a statement. That's a very strong statement, Raj. Okay, resistant and resist, okay. Okay, you have said pivots are invincible. Do not go against the pivot, just go with the flow. Excellent, that is the right thing. Just go with the flow. If you happen to have pivot around you, oh, that's the best thing to happen. Yeah. Okay, so why my moving average itself and the traditional one is different? Why must I extra draw a line on the right side? Why don't I just follow the moving average itself? Now, I'm a guy who wants something simple, easy, and consistent. I cannot take it when people tells me that market may go up but may go down. Oh, I cannot accept that. To me itself, if you tell me this, I really don't know what to say already. So I prefer me a direct point. Tell me if the number hit this point, will it go up or will it go down? I think that is what I will prefer. All right. So for me, moving average itself comes from the last 200 bars. Okay, and then you compute a number. So by right, that is a strong support or resistance level. If the market cannot go past it, it will be resisted. If it touches and recover, it's support. So that means I will know exactly what to do. And the color change will help me to know what direction to take. So that's the reason why my moving average itself is on the right side of the chart and instead of the linear moving chart, because I don't want it to move. I want to be fixated there so that I can see where's my support and resistance on the market, or market is bullish or bearish at the moment right now. Okay, so that is how we do that, yeah? Okay, then after that, we managed to talk about the KSI, and I think that some of you have updated me and said that a bit lost on the KSI, because if market goes down, indicator points down, understand. If market goes up, it points up, understand. But how come sometimes when the market is going down, the KSI is pointing green? So this is something that people don't understand. Don't worry, later on when we do the elephant trade, I'll explain a bit more on that. But the main gist of it is that do not use the KSI as a guide to trade. Remember, the OP rule is still the guide. The color is still the guide. The KSI is only for one purpose, is to tell you to play big, to play small, to play normal size or reduce size. Or if you're buying but the KSI is red, then take profit along the way. If the KSI is green, then this you can take profit and let it ride. So this one itself, right, I'll write in some wordings and put it in the Telegram later. But remember, KSI is not here to predict the market. None of my system is here to predict the market. Okay, but we can increase the probability, that's for sure. Right, so then say, don't fight the pivot, so powerful, just follow with the flow. All right, something similar there. Okay, so now we're going to go into the next thing called KCX, because you need to learn this to know the diamond. Okay, let's go into KCX mode right now. Let's go. Okay, so what is KCX? It stands for Cal Cyclical Extreme. Cal Cyclical Extreme. So very simple. Let me explain to you. Very simple, yeah? Okay, first of all, the thing is this. There are three colors here. Huh? Three? I thought two? Three. Okay. We have here black. Okay. You may say it's like it's empty, right? Yeah, it's empty, but we call it as black color. Okay, then we have blue color. Then we have green color. So there are total three different colors for KCX: black, blue, green. So how does it work? Okay, simple. So what does it do is that it's also called as a retail indicator, retail, yeah? So how does it work, right? Let me explain this to you slowly for your understanding. Okay, so basically, right, in short, when the market basically has it turning like this, it turns blue in color, that means that the retail has started to sell. The retail has started to sell. Okay, when it's blue in color. So when it turns to green in color, that is where by right, we are very near a bottom. By right, we are very near a bottom. Now, why I say that? Because when retailer sell until cannot make it already, they already sell everything out, right? Their face turning green color. That's normally where the boys come in. Okay, that's where the boys come in. And if the green is very long compared to the next bar, that means we are definitely very, very near to a low level already. So when you see this performance, guys, take note. When you see this performance whereby the green is the longest compared to the right and left green, you see that? The middle green is the longest compared to the left and right green. We are near a market bottom. Can understand this? If yes, text number 29. All right, can understand? We are near a market bottom. Okay, so let's take a look at the one on the right side. Now this guy is blue, then you have long green and a shorter green, right? So that means that we are near a market bottom. Can understand? So that is how we can diffuse a potential market bottom. All clear? All right, this is how it works. Yeah, a market bottom is somewhere there. So, okay. All right. So why does there's a blinking here and then the previous this one don't blink? Okay, so first of all, we read the chart from right to left, right? So the thing is this, you can see this guy is blinking because this is the one that has hit the minus 300 level. So that means if I move the chart a bit to the right side to see this whole thing better, can you see that there is no green color, even though there's no green color in this area? Don't have. Then of course don't have, right? So you move back the chart, move all the way back. The last time that is blinking itself is here. Oh my God, so far away. Okay, so that's why the nearest portion that is below minus 300, it will blink. The last from right to left, the latest or the last one that is below minus 300, it will blink. So that tells you that the market actually have a very strong buy call here. And you look at it right on the long haul, gold ever since here, right, until all the way has been a very strong bull market. Very strong. Very strong. Now, actually, right, when the market was coming at this point, I thought that the market will go down and go to the minus 300. And then I will definitely go in heavy long here. So definitely heavy long. But too bad, it misses by a bit. Then the next day, it recover already. Yeah, my thing didn't execute. What a waste. What a waste. Okay. But the I buy, of course, remember I told you, right? Once you see the thing turns around, you can buy already. So you can see right now, the KCX here is moving upwards. That's why the price move upwards. But the most important thing is that when it turns black color, that is where the buy really steps in. When it turns black color, that's where the buy steps in. Okay. So as long as the KCX is black in color, the market is bullish. So even though the price may pull back down, it's still bullish. Even it comes down, it's still bullish. Can you see that? So I can see price number 30 right now. Okay, so let me share with you. KCX, right, is originally created for bull market only. The indicator is created for bull market only, for bull, yeah? Bull means for buy market, yeah? Bull market. So once you see green color, you wait for it turns to yellow color, you can buy. I repeat, once you see green color on the KCX, the candle turns yellow color, that is where you can buy. So now you move back and see the past. Okay, example. Here turns green and the color change from red to yellow, buy. All right, now take a look here. Here is green, right? Here is green in color, but look on top. Do you see color turns from red to yellow? Not yet. So as long you see green color, but you do not see it turns to yellow candle, you cannot buy. Are we clear on this? The candle must turn to red to yellow, then can buy. Yeah. If not, you just buy randomly. You see, you'll be killed by the market itself. So do not trade when the candle is still red in color. All clear? All clear. Press number 31 right now. This is very important because previous batch itself, right? Not previous batch. Some student saw the KCX turning green, and because of this particular example, whereby the market, right, instantly bottom out, right, and then the market run up. So some students are in their own funny mind, they see green color, they think it will be the same thing. So what they do is that they just buy. So they buy here, buy here, buy here, and then they got caught by the market. Yes, I got one student telling me that I actually bluff him because I say KCX turn green can buy. When I look at the chart itself, right, I told him, brother, your bar is still red color. Why are you buying? Then he quoted me and said that because the KCX turns green can buy. I will never say that, yeah. I will never say that. I will tell you that it has to turn to yellow, then you can buy. So you can see later, it turned yellow, right? Then it really goes up, lor. So that is a fact of the matter. Okay. All right. Now, when it's bull market, it's very powerful. It's like, wow, cannot lose one. But when it's bear market, we have a problem already. Now, take a look. Bear market. Let me show you bear market condition. Okay, guys, this is a bear market on gold back then in 2022, whereby the market peak was somewhere around here, and it goes all the way down. All right. Now, do you notice that we also have the KCX turning green? All right. But you notice one thing is that the upside is still there, but it's not as strong. And how do we know that the market will not go up anymore, right? This one, take a look, everybody, look here. This one here, everybody, look here. Now, do you notice that this is where the KCX is green, but the candle from red to yellow, then instantly turn red again. Now, this is a very classic way to tell you that the market is going to sell already. Why? Because the market goes up, right, and immediately the next day sell down again. So that is how and why the gold can go down. Now, of course, occasionally itself we still have a bit of retrieve trade, but majority of time when the market is bearish, the KCX will not be accurate. In fact, it's more for a sell instead. So later on, you put in diamonds, right? Then you see why it's so important already. And that's why the whole jigsaw puzzle is soft. All right, so where we know it's a bull market, right? Very simple, actually. I can tell you now, the biggest and the easiest way is this. You just have to take a look again at the chart and you notice that as the KCX is, is there calling for buy, right? You can see the price keep on lowering down, until you notice it start to go up. Only when you see the things start to go up, or the KCX is blinking, then the market is U-turn already. And you can see after that it's all right. When the market is bullish, this area here is black color one. Right, so even though you want to buy, but you see here it's totally black, so all the CCRY you buy, right, will be very effective. So I repeat myself again. When the market is bullish, concentrate on CCRY. When the market is bearish, concentrate on CCYR. This one all clear? This is very, very important, yeah? So if you notice that when the market is bearish, the KCX green color is very near to one another, and it's stacked together like a Lego like that, like all the greens come together. This is a typical bearish signal. A bull signal, right, is opposite, whereby you can see the greens are very clear, and a lot of time itself, right, the green is isolated. It's only one movement like that. This is a very bull market. So without seeing the market, I don't even see all this, yeah. I see these four of them, I know the market is bullish already. Can I understand this? Can I send this? Press number 32 right now. Okay, excellent. Now you also notice that the width of the blue area is smaller than the one on earlier. When it's bear market, the width is bigger. So again, through the width, through the KCX itself, right? How you see this area that it became a block of greens versus here itself is singular green. These are all the telltale sign of a bull or bear market. So now everybody take a look at the gold price right now. Tell me, is this still a bull or a bear market for you? A bull or a bear for gold? Please key your answer right now. Bull or bear? Bull means buyer market, bear means seller market, of course. What do you think? Okay. Now, if you see the chart, if you see the chart, and tell me it's a bull, then that is not using the system already. You're just viewing visual. But you tell me, oh, because I see this, wow, this one can't even go down to green and go up so much, right? Wow, very bull, correct. That's why wasted lah. If the market had touched green, I would really were hammered. But because it missed, right, I thought there'd be one more day of downside. Yeah, then too bad. The gold price immediately shoot up. What a waste. Really, what a waste, yeah? Okay, so that is how it is. All right, so the KCX itself, with that, this will also start to show one very important thing that leads to the diamond already. Okay, now let's go to the diamond thing. So how does this diamond appear on the screen itself, right? It's because of this simple rule. First of all, we must have the KCX turning green color. Then you look up. If the bar is red color, no diamond. But because it's a KCX turning green already, so the system already register something, a bottom is coming up. So the moment the bar turns to yellow, you can see that that's where the blue diamond will appear. So the blue diamond is going to appear when there is a KCX earlier at the green area. Then subsequently, the bar turns from red to yellow. Then when that happens, the blue diamond will appear on your screen. All clear. If all clear, press number 33. Wow, 33 question already. Okay, all right. So now you understand why someone asked me this question, Cal. Yes. How come there's no more blue diamond? How come ever since here until now, how come got no blue diamond? Because there is no more, because the one set is given, one green and one yellow equals to one set. All right. So unless this down here turns to green, then the second set will be here, but there's no extremity being triggered. So that's why at this junction here, since last year December until now, only one buy. And how to buy? Very simple, red to yellow, red to yellow, red to yellow, red to yellow, red to yellow. Can you see that right now? So as long as the market is bullish, you just concentrate on one coloration. Red turns to yellow. Okay? All clear? If all clear, press number 34. Wow, some of you are very fast. I just say only you already, before I can say the next number, you already text in already. So fast. Okay, so when the market is bullish, you just have to stick with one principle, CCRY. So if the market is bearish, then we just stick to one principle, we just sell. Okay, let's look at the recently, I think one of the where very bad market was China. Let me just bring you in. No, it was crude oil, sorry. Crude oil was a very bad bear recently. Okay, so you see, when the market here is bearish, now you see there's a lot of KCX, right? But you see the CCRY don't have strength, don't have. Only here, then got a bit of strength, but it's low. It's still a lowering one. That's why once the market break down, only the market sell down again. All right. So now we have a new KCX blinking very bad, very big KCX, and then straight away you notice the market is now going up. So you look at it, guys. If I put the alignment properly, right, you see it better. So the KCX blinks, very big here, right? Okay, let's bring this away a little bit to the left side. Okay, so you can see on this day it closes here, but the KCX already blink very strongly at the bottom. But interestingly, the real bottom recently is this guy who basically opens and trade down instead, breaking the low of the previous day. But then after that, when the market rebounded, right, the KCX is no longer available. The green area is no longer available. So we know that we have seen a potential bottom of the crude oil market already. All right, a potential bottom of the crude oil market. So that's the thing here. We trade in this manner, shortcut. If you see a KCX blinking and it goes above OP for a buy, usually it will go up. Simple. I repeat, you see KCX blinking, you look up for the next bar. If the next bar is staying above OP, then you should be looking for buy. Okay, all clear? So like I say, here was a green color KCX. You look up. All right, it was closing at near the low, but the next day the market purposely opened, went down first, and then after that stay above OP, and that was how the market goes up. Okay, all clear? If all clear, press number 35. Now KCX, I really need you to pay attention to detail because this will help you a lot. Okay, it will help you a lot, and you can actually use this very well with other market itself. Yeah. Okay, so let's try again. This is the 2024 chart. So you can see that when you see a KCX that's blinking in the bottom corner, you look up, CCRY, you buy. Okay, then it keep back down again, KCX again blinking, look up, CCRY, buy again. But again, this is downward trend. So you can see after 1 day, 2 days, the price come down, right? So that means that the market is still very weak at that point itself. Still very weak. So that's why I keep on telling you, don't buy crude oil first, wait for it to come down, and then we look towards the buy. Okay, so that is KCX. So with KCX, it conjunct with the yellow bar, and that's how the diamond, the blue diamond appear. All right. Now, when if you install properly and you don't see a diamond, right, don't panic. Just go to the right side of the screen and press the word refresh. Wait for a while, the diamonds will come out. Now, why the diamond didn't appear instantly just now? Because there was some calculation that need to be done before you can see it. So all these are fully automated, but of course, you know that why there's a delay, because I say we do not want the broker that we're working with to basically pepper our data, because we are traders. We earn our money through trading, subscription, commission, okay lah, good money, but it's nothing near to trading money. So please understand that, yeah, very important. Okay, so now we have the blue diamonds because we have now the KCX blinking, and then we have the blue diamond. Then what is the 4 diamond then? What does 4 diamond has to make me a trader, right? Watch out for this 4 diamond. Okay, so simply put, we have 1 diamond. then we notice that this one diamond itself, right, always, doesn't really, I mean, it's a good bottoming out signal, but still, we can make it better. So that's why one day someone asked me about this thing here, having it, and then how we trade it itself, right? How come we can get a high return? So I told them this very simple, right? If you look at the diamond, why there's a 4 diamond is because this guy must be yellow in color first. This one is first condition. This first request. All right, the same criteria. Second, please listen, yeah. The KSI has to flip from red to green or green. I repeat, for the condition to work, this guy must be yellow color. The KSI has to be green, that's for sure, but the previous day has to be red. So which means that there must be a switch from a seller cam to a buyer cam, plus the candle must be yellow, then it will have a 4 diamond. But is that the end? No. There's one more condition. One more condition is that you have, okay, you must have the KSI, the KCX from blue turns to black. So one of them must do. So yellow color, KSI must be green, and previously from red to green, just red to green. Or the KCX, right, from blue to black. Okay, so these two KSI must from red to green. This transition must be inside there, or not. The KCX from this blue to black, this transition must be there. So one of these two is right, must have something of sort happening, and they must all be in line, which is the yellow, green, black strategy. Yellow, green, black strategy. Now with that itself, then the 4 diamond will appear. All right, then the 4 diamond will appear. Right? Understand this? If yes, press number 36. Now, if you don't understand this because of the, you say again, what green must be this, must be that, right? So basically, right, it has to come with this point here itself, is that there must be a transition from a seller to a buyer. Then the power will go up. So it can be from the big boys, it can also come from the retail. But basically, both the big boys indicator and the KCX indicator, right, both of them, one of them must show there's a turnaround from KSI from red to green, or KCX from blue to black. This one, you must remember that, yeah? Okay, so we have the 4 diamonds and the blue diamond. So what is the more powerful one? Okay, so blue diamond is more for market bottom. Blue diamond is more for market bottoming. So let's say you are short in the market, you see a blue diamond, then I think you should consider to buy back your short position. Okay, all right, so that's how it works. Now the 4 diamonds is because there must be alignment of yellow candle, KSI from red to green, KCX from black to blue, blue to black, sorry, blue to black. When these three are all in line, then the 4 diamond will appear. The 4 diamond will appear. Okay, all right. So any questions on the diamond? Yes or no? Please key now. Yes or no? We haven't go to application yet. We're talking about how to find the diamonds. Yes or no? Any more question? Question from Raj? Question from Shani? Is that how I pronounce that? Questions? No question, then press no. Question, press yes. So I want to hear from you, yeah? You can use the microphone if you want me to use that. Yeah, just say, Cal, then turn on my mic first, and then I just turn on for you your mic. If not, it's by default, I shut off everybody's mic. If not, sometimes accidentally you may press it and then all your background voice come in. Okay. Rush, no question. Okay. 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 If no question, then I will show you a PowerPoint slide that I showed on last Saturday on to my students about how to use the diamond. Yeah. So let me bring it down to you again. Okay, so for those who have seen it before, can see again, yeah. Okay, cut it over there. Yellow candle, red to green, KSI, black to blue, 4-diamond. Yeah. So one of them, red to green KSI, okay, or KCX blue to black, okay, or it can be as long one of them do a transit of changes and the other one stay as black, that also qualify, yeah. So the two conditions, the KCX and KSI, as long one of them do a transit, the other one as long as a black color or green, it will work. Okay, so let me show you now the what I shared before. Let me show you this again. So this is the CRAZII system with the diamonds, yeah? Okay, so how do we trade, right? Very simple. First, once you saw a 4-diamond or blue diamond, draw a white color line at the closing price of where the diamond is. So the chart that has a diamond, the closing price will become a target center for you to use for buying or selling. Now, if the market stays above the line in this case, you can only be buying. You cannot be selling. Now, you may ask this question. This line, we draw ourselves. Yeah, you have to draw it yourself. Why don't you draw for us? There's a reason behind that. Okay, I'll speak to you later. So this line, how long must I draw? Draw until the next diamond appear. Okay, draw until the next diamond appear in this case. Now, of course, if the market is already flying away from you, then of course you don't need to extend all the way unless the market pulls back to the line again. Okay. Now the thing is this, guys, your job is to buy around this area. Your job is to buy around this area. If you buy here, if you buy somewhere around here, right, it's very dangerous. Why? Because you don't have the support of the line that you draw. When you are buying at this group itself is A, this guy is B. Now all the candles around A is good to buy because it's bouncing around the line that I drawn. But B, right, is already so far away, so the impact won't be there. So please don't tell me that you are buying gold here at C because of the diamond here. This is absolutely nonsense. Right, the guy is already in the space ready. How can this Mother Earth helps much? Correct or not? So no, you cannot use that point. So Cal, then when is the best time to use a diamond? Of course, the best time is when it stays nicely above the line. Wow, champion trade. Once it bounces around at the line and it never goes below the line, so that is where you can go in to buy, and above 4P, you just let it run all the way until don't know when, yeah? But at least you know now that how to use the diamond, yeah? So whether it's blue diamond or 4-diamond, the way of usage is the same. Just that 4-diamond itself, right, is for adding position. So if you have bought earlier, now you can add more position and chong with the market by playing a bit bigger. So same thing again, once you see a 4-diamond appear, you will draw the line. And then after that, if a new diamond appear with 4 diamonds again, you draw the line. So of course, in between got blue diamond that we draw, we also draw, yeah? So now we understand this. Above the line, we buy. Above the line, we buy. Although it's a bit crazy though, the market open only should have go up already, right? Then open, we buy. So it's very easy to trade when the market is bullish. But then how do we put a stop loss, right? That's a good question, right? The stop loss will be placed at the candle that has the diamond. I repeat, whichever candlestick that has the diamond as a low, all right, that means this particular candlestick has diamond on top of it, below it in a way, and then now exit, right, the stop loss will be placed at the low of where the candle is the low. So if you follow this itself, right, you will know that your risk where is it and can trade very easily. Okay, Joe got a question here. Entering using diamond is don't you check the pivot or the OP? No, of course. So the thing is this, if you know where the diamond is, you know what to do with the diamonds, then of course with the OP and the pivot around you, you can use it to advantage. Example, to add position or reduce position. Yeah? Not every diamond will make money for you. Yeah, example, right? You see this particular candle. This one, if you study candlestick, right, you know that the closing price is here, right? The next day, the opening price is here. So the market open straight away go down. No? So if you don't know, if you don't use the OP rule, you just basically use the diamond rule, you'll be very badly hit by the market. Okay. Vincent, diamond indicates strong resistance support level. Actually, let's say, yeah, I mean, if to put it crudely, it's like a support resistance level, yeah, support. But to me itself, right, it's one more level higher. Okay, you see, the Eureka moment is that when I ask myself this question, I've been trying my best to do the buy signal and sell signal to make a wonderful system, right? Then I realized that I couldn't find an answer. And of course, the last 100 over years, people try to break the code, also never make it. So then what makes us think that the diamond will make it? Now it's because the diamond come from buying, right? You notice most of the time the diamonds are all in the buying mode. Either KCX is the bottom or the KSI, KCX are all online. Then it's a buy. So actually, right, we are following the other people, how they are doing. But then I noticed this. If they are supposed to buy and the price is supposed to go up, right? Then how come the price will fall? So I noticed that this is a psychology thing, and the boys have been using this on us for the last how many decades already. So that's why enough is enough. Hence, therefore, when you are buying something, make sure you're buying near to the line and make sure that, for people itself, right, you need to watch out for that. Now, if the market is too far away already, ignore this. Just trade your normal style. Or you can do the 5-minute diamond in the 5-minute chart. Okay, so Vincent, Joe, all understand what I just shared. So when I answer your question, do me a favor, guys, you all must reply to me late. So that I assume that you accept my explanation. If you don't accept, right, you can continue this sharing one, yeah. So have you all understand? Yeah, answer you, Joe, Vincent, and yep, answer. Okay, good from Vincent. How about Joe? Okay, all right. Can Okay, good. Okay, so you can see if you put a stop loss according to plan, they will not get tripped, and as a matter of fact, they get profit first. Okay, you can buy anywhere. All right, you can buy as long as near the line. Okay, so let's take a look at this. Is the gold market recently? So recently, gold has came down strongly, and the KCX was blue color. But interestingly, the next day it turns black color already, and then the market shoot up. Okay, fine, no problem. Then why got a 4 diamond here? What's the reason? Because this guy is yellow. This guy has turned from red to green recently. So even though here at the bottom here, okay, even though the market is really at a very high level, and then the KSI, although it's green, but if you look at the diamond, you notice that the diamond is there. So even though the market has really recovered quite a fair bit, right? You just have to place the line at the closing price of where the diamonds is. So in this case right now, you see there's a diamond here. The closing price is here. So that is where your line is. All right, as long as the market don't break the line, everything is good. All right, can you see that? So you can see over here, there's a new 4 diamonds. You draw a line across it. Oh my God, look at it, how the market stopped exactly at the line. So this again tell you a very good tool for you to buy somewhere around the line and then put a stop loss near to the line and then let the market decide. This is very powerful, yeah. So you can see the next one here. That was this day when the market has a basically went up so much already, right? From the here at this price, at this junction here, it was 2948 around there. When it was here itself, you can see this is 31.75. So it's more than $200. So when the market opens here, by right, a lot of traditional traders will definitely sell. But for us, we just follow the rule. It's yellow color means it's a buy. And since now we know there's a very strong support here at 31.75, we know that the upside is just a matter of time. Okay, all clear? That's how we do that, yeah? So once you have the diamond, just draw a line at the closing price of it. Then the rest just follow through with the line. Okay, all clear? If all clear, press the next number. That will be number 37. Oh, that was very fast. Joe already texted 37 before I can write anything. You guys are very fast. Okay, all right, let's do a few more examples before I take a short break. So same thing again, your stop loss had to be placed at the right place, okay? Make sure you place at the right place, then you won't be triggering it itself. All right. Now, sometimes the stop loss can be very near, sometimes can be very far. So how do we counter this, right? Later on during the reward management, I'll show you a methodology that you don't need to spend more money to play a bigger game. No need. Okay, so let's take a look at this one here. Before I share my train of thoughts, please look at the diamonds and then place the line that you think should be there. Right, I'll give you 1 minute to take a look and tell me where the lines were supposed to place and then what happened during that period of time itself. Okay, let's take a look, yeah? Okay, so first of all, it's a diamond. Draw the line at the closing price. Okay, so now listen to me, follow my train of thoughts. Okay, when the market was going up, right? Everyone follow me, yeah? When it's going up, right? So you see a diamond and you see this yellow color candle. So you draw a line here itself. Now you are doing it all correct. Now look down. Now you look down. You notice that the KSI is red in color. Notice that? The KSI is red in color. You notice that your KCX is blue in color. Can you see that? So from here itself, right, the KSI is red. The KCX is blue. These are bearish indication. So that means, right, if you want to buy, you should buy little or half size for the next day. So the next day, when you are buying, you buy little because you know that the boys are not with you. All right, all clear at this junction here. So you still buy, but you buy lesser because the boys are not with you. Yeah, very important. Okay, all clear? If all clear, press number 38. Okay, all right, good. Now, everyone, take a look here. The market really seemingly not able to go up as usual, yeah, because the boys already tell you I'm a seller. Now, once the market goes below the line, you should know that something is wrong. And if the candle turns to red in color, you know that definitely something is wrong. And because you already had the heads up from the boys, you know that something gonna go wrong. So once the market goes below the line and the bar is red in color, you do not need to wait for stop loss to be triggered anymore. I repeat, once the bar turns red and is below the line, okay, you just cut your position and you can turn short position. I repeat myself one more time. When the market goes below the line and the bar turn red, no need to wait. Just cut away your long position and turn short position immediately. You will see that the market will really fall. All clear on this one here? So let us try another example. Yeah, your watch. Yeah. So this one I draw here. Now, why I didn't draw the first one? Because that one next day is a buy, so I just skip it for example purposes. Yeah. So you see the market, as long as it stays above the line, even though it went below line temporarily, but the bar is yellow, it's okay. It's okay. Yeah. So after that, you notice here the color has changed to green, right? So with the bar yellow, it's above the line and it's green KSI. Then of course KCX is black in color. Wow, okay, course is clear. Let it run, let it fly. enjoy the profit. All clear? Okay, even before the bar close, you're talking about the sell side. Yes, once the market goes below the line and the bar is already turned red, just cut. Don't need to wait already. Don't wait until it finish. By then it finish, it's too late already. Okay, but of course, if you're not comfortable, you want to wait a little bit more, that's your choice. But as I say, I'm the creator of this. I back tested it. There are occasions whereby the market ding dong a bit, a bit scary. But usually, if the KSI is red already, right, downside is almost it's going to be that's going to happen. All right. Okay, so now everyone follow me. Very important. Follow me. So now I should be buying around here, right? Okay, so 1, 2, 3. Okay, now you notice that 1, 2, 3 can buy lah. 1, 2, 3 can buy. 4, 5, 6 already too far away. No point. Now the question comes here, Kel. If the market opens here, right? This way opens, and then after that, right, the low come down to this point here. The low came down to this point here. It's only marginally above the white line. Can I buy there itself? Now, if you buy at the horizontal line, it's not allowed. Why? Because it's still below OP of the day. But because it goes so near to the line, and then it rebound above OP, then if you want to really want to fight, you want to buy, you can try. Because this case itself, the low went very near to the line. It didn't get triggered, but it's very near. And then it rebounded away back to above OP. Now, based on OP rule, it's a buy already. So since the line have tried to test the diamond line, right? So you can take it as a form of a guidance that you can still buy. But if very too far away, then forget it. The diamond line is not able to provide the traction that you need. Okay, now let me explain to you now why we don't want to draw line for you. Because we don't know when will it hit the red color candle. And shall it hit right, the chart looks very ugly. So we want you to draw it yourself. And then when this happened, looks everybody, the price was going up. Agreeable, it was going up. Then suddenly the bar turns to red. And once it goes below the line, now by right itself, the stop loss should be here, right? But once it goes below the line and the bar is red, don't need to bother already. Quickly just sell. And of course, at the same time, if the KSI turns red in color, oh gosh, you better run, yeah? This is crude oil before it slammed down. Now, several of my friends who do with crude oil, they were caught by this. Now, when I send a message, tell them, say, hey, brother, something is wrong here. The market, 1, 2, 3, 4, 5, 6, 7, 8, took 7 days to go up there. Yet, within 2 days, it's half gone already. So I told my friend, be very, very careful. 7 days go up, 2 days half gone already. So after that, right, my thing turns red color. I told him, bro, it's below my white line. The KSI has turned red color. Be careful. So of course, they put a stop loss there, which is here. All right, now that was good. They put stop loss, it got triggered. But the thing is this, real story. What happened here? They put a stop loss here, was triggered already. But because it's lost money, right, they get very upset because they were making profit all the way for many days. So suddenly one day, the bar turned around and turned red color. And the stop loss that you notice was triggered almost exactly at the low of the day, right? They feel very unjustified lah. They feel very like unjust. They feel that injustice done on them. So you know what they do the next day? Oh gosh, like all great story. They began to buy oil. Yes, they began to buy oil. I was asking them, this is day chart. This is day chart, yeah. Why you buy oil? I asked them, the market is coming down. They say that because they think the fundamental of crude oil will go up. Wow, that is where it's always a killer. Please, guys, there's no fundamental in technical analysis. You cannot put fundamental to put into technical analysis and expect the market to do something different. So what happened is that because the market came down already, right, and then it bottomed out over here. So when they start to buy itself, right, they think that, hey, this is good. What? The market came down, consolidated, boys came in, they buy. So you know what they do? They tell me that the market will be supported because since the boys has buy over here, then they will buy again here. Wow, that is absolutely nonsense. This is absolutely nonsense. Look at it again. Their reason for buying is because they say over here, boys buying. So now this is the previous cycle low, right? So they suspect that the market will buy again. This is absolutely wrong, guys. The diamond tells us the market is below the line. The bar has turned to red in color. Sorry, whatever happened in the past is over already. So unfortunately, the oil price continued to plunge, and they got stopped out. They got stopped out. Each of them about 10 grand. They lost their money all there itself because the market dropped by $10 over. Yeah, they lost all the money that they had. So this is a real story. I mean, I don't tell you always a good story. I tell you I give you the in-between stories, the good, the bad, and sometimes the terrible stories. This is what happened. So please do not do that. Okay, do not do that. All clear? Yeah, real story. Yeah, 3 of them lost $30,000+. Really very sad. Okay, now the question comes in, Cal. If I follow your rule and I short the market, where do I put my stop loss? This one very simple. Where you shorted is where you put your stop loss. So take a look. Take a look. This is where you shorted right below the line. So the highest point of the candle that you are shorting will be your stop loss already. So wow. So I can have a short loss. I can have a stop loss that's very small range. Yes, sometimes big range, sometimes smaller range. It doesn't matter as long you make money. Okay, as long as you make money, that is very, very important. All right, all clear? All right, if all clear, press next number 39. Or Joe, you already pre-wrote the number before I can say anything. So fast. Oh dear. Okay. Reading my mind along the way, yeah. Okay, so this is the China index, and it has the same opinion, yeah. Okay, let's take a look. So this was where the market basically. Oi. Lichun, I think your handphone. Oh dear. Lichun is drawing for me. Wow, is that wow? Okay, Lichun, I think you need to I think your handphone or your laptop is in your pocket, something like that. That's why you see his picture everywhere. Okay, let me clear the screen. Yeah. Okay. Okay, where am I? Find Lichun first. Where are you? Okay, I think stop already. Okay. All right. Now this is where the China A50 shoot up on that day. Then everything was good, right? All is good, right? No. You notice that? This is the diamond. All right. So some of you say, Kel, you see, your thing Bei Chun, not accurate. You see, on this day, the market close above the line. So you should buy, and then next day you lose money, right? Now it's very easy to, some people just love to find fault for you. So I always like to say, you sure or not? You say, confirm the candle close above it, so you are wrong, I say, okay, let me show you the chart. Then you tell me correct or wrong, yeah? So fun. You see how? Take a look, everybody. Okay, so I clear my screen first. Then I put in China A50. Now, take a look, everybody. So Korea, KL, you see the market, right? Close on top, so you see, if I buy, I will wrong on that day. I say, okay. All right. So everybody take a look. I change this to the black and white now. You tell me again whether it's correct or wrong. Now, take a look, everybody. Take a look. Can you see now? Then take a look. Did the market close above the line or above the line or below the line? Everybody, take a look. Did the market close above the line or below the line? Everyone, key answer now, above or below? Yes, the market closed below the line, exactly below. So that was where, when I saw this, I told my wife, I said that China market going to fall. And trust me, right? My wife from China, she said that you don't know the market because the market is supposed to go up already because of this and that. Who say this, say that there will be a big fund coming in, $500 billion coming in to jack the stock market up, to buy the property market, they give you some laws that the bull market is coming in, blah 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 blah. Right. So the next day the selling persisted a little bit, but the one that turns was here. This was where the market touches again the market. And for those who know KCB, you will notice that it touched the KCB perfectly itself. And then after that, the next day is where the selling really, really ignite. And then after that, the market collapsed as we saw. Now, I never believe in one thing. I never believe that this Xi Jinping and his people don't talk first before they release news. I never believe that Donald Trump is able to give a mandate on his policy through Twitter without going through his friends. Yeah. Okay, Vincent. Hi, Cal. So we follow the crazy candle MT4. If the candle is so small, we give a second thought. I don't understand. So the question. You follow. Okay. See, the MT4 candle and the crazy candle is the same thing, but it's just that the coloration itself, right, is added stuff. So you just have to follow the OP rule of the day. So the crazy chart itself may be yellow color, but it's below OP, right? So you still follow the OP rule. The reason why I do a contrast is because some of y'all cannot see the candlestick. So I purposely put a contrast for you to see the difference there. And if the candlestick is too small, when you say small, it's which one here? You're talking about this one here? This guy that is small? Is it? Now, it's small, it doesn't mean that it's as long as the market is below the OP and it's below the line, we just have to do what you do. But just that because we haven't turned red, we can only sell on this day. Only this day that we can sell, yeah? The previous few days itself, right, we cannot really sell unless you really want to take the bet on the market, then you can sell below the line. But that is very dangerous because it's still yellow in color. No need, because you don't need for a second. This is Peter, I think, Peter Liao. Right, you don't need to wait for it to turn, wait for the next day. The moment the market stays below the line, you can short already. But again, my condition is has to be red color, yeah? So that means these few days by default you cannot trade. These few days you cannot trade because it never really stay below the line with a red candle. But it's only here on this particular day, then it's turned to red color. Yes, it's a 4 diamond close call. Okay. But as long as it's a 4 diamond, you just draw the line at the closing price. Don't care what happened. Next day, small or big, you just trade accordingly. But remember, must be below the line and must be red color candle. Are we clear on this? Very clear, yeah? Must be below the line and red candle, then we short. Then if it's above the line, yellow candle, we can long. But once it goes below the line, something is wrong already. Okay, Ken? So Vincent, all clear? Peter, all clear? Okay. The only thing that will basically make your heart piece off is that I just buy just now, then now go below the line. What should I do? I know that feeling. After you buy, only the price come down. All right, I know. If it's going to be, and some more, you don't care. KSI also green lane, the KCX also black lane. How come they don't go up? So this is a good question. How come never go up? So don't you think that if how come cannot go up means something is very wrong? So as a trader itself, right, when something supposed to happen doesn't happen, right, the opposite will usually happen. So now I understand why the boys are always so good at this game. They can make a lot of things, conjunct a lot of things to make you think that you'll go up. Then that is where their main motive could be a sell. So that's why we cannot be stubborn. We cannot be like, oh, just because I buy, I don't cut anymore. If you look at the chart again, for 4 days, the market refused to go up, means something is wrong. So when the market turns to red in color, right, where everybody is still thinking that it can buy, something is wrong. And the boys when we come in to sell, you see guys, when the boys come in to sell, wow, they really sell already. So that is the reason why I like to use this KCX, use a diamond, draw the line, and then I trade, then I watch the KSI. So when the market was red in color, right? When the market was red in color, this area here, okay, the KSI all the way was red in green in color. So you notice the downside is limited. The downside is limited because the boys keep on buying. Hey, wait a minute. Boys keep on buying. How come How come the boys buying never push up? That means someone is selling even stronger than the boys. So who are they? I don't know. My KSI limited I don't have the world data, but based on good numbers of things that I have, I roughly can know the thing already. So of course, I ask you a very deadly question. Yeah, I ask you, the market is supposed to go up, it didn't go up. The market is supposed to buy, the selling didn't move down. So now, what if the market turns to red color candle, KSI turns red, KCX turns blue, then what will happen? Confirm sell already, lo. Can you understand that? Can you see my point? Supposed to go up, didn't go up. Supposed to go down, didn't go down. But when everything's aligned, KSI bar is red, KSI red, KCX is blue, the selling will come already. All clear? If all clear is all right, then we all know what is to expect. Yeah, all clear? If all clear, press next number 40 already, right? Thank you very much. Oh, you guys are fast. I haven't seen it. Oh gosh, you guys are reading my mind every moment. Okay, got it. Okay, guys, we will take a short break right now. It's 2:40, a bit extra with 10 more minutes. We'll take a short break. Please come back here itself at this 2:55. I give a longer break this time round for you to get a wash up. 2:55, please be back. 2:55, yeah? Okay, thank you.